list, a business news roundup, the Dow of real estate, and IPOs. The Shanghai Composite closed at 5,043.54 today, up slightly from its slump to just above 4,800 on November 28. The CSI 300 index ended at 5,037.20 December 20, back up past 5,000 for the first time in a week. Shanghai B shares continue to flounder since our last episode and closed today at 354.58. Shenzhen Bs continue their slide and closed December 20 at 679.18, although they are still above the in-November trough. With performance like this, it appears that investor confidence is weakening, particularly in B shares. But remember, B shares remain the best performers in the world as 2007 draws to a close. The Hang Seng Index is back up above 27,000 after falling all week. This level could be a new baseline, as I don't see the Hang Seng falling back to the levels of last summer. In money matters, excess liquidity continues to bother Chinese regulators and fuel inflation and risks of overcapacity in certain investment sectors. Interest rates were raised again this week by China's central bank, the benchmark one-year lending rate up to just under 7.5%, the highest level in almost a decade. Chinese capital is finding its way back to America. The National Sovereign Wealth Fund, China Investment Corp, will make a $5 billion cash infusion to Morgan Stanley, which posted the first loss in its history due to so-called subprime bad loans. Morgan Stanley is a long-established China booster, a major underwriter of Chinese IPOs, and the investment is the biggest to date by China's new state investment fund in an American business. A couple of interesting news items worth noting this week. International companies grabbed almost 25% of television advertising during China's golden period, the 60 seconds of advertising space after Shenwen Lianbao, the country's top-rated news show. Last month, over $1 billion ad revenue was sold in the yearly auction by China's Central Television. Oil major Chevron signed a 30-year joint production deal with China National Petroleum Corporation PetroChina subsidiary Southwest Oil and Gas Field to develop the Chuandongbei gas site in Sichuan province. Chuandongbei covers around 2,000 square kilometers in the heart of China and may hold 5 trillion cubic feet of natural gas. The facilities planned in the region could produce up to 740 million cubic feet of gas per day. Some new figures on the coming demographic crisis in China were released by the Chinese National Committee on Aging this week. Already, over 20% of the world's elderly people live in China, and their number is increasing at 3 times the rate of China's natural increase. As in the USA, the number of people reaching the age of 60 and above is increasing rapidly. The older population is set to rise from just above 11% currently to around 25% by mid-century. Chinese population authorities warn that economic progress may suffer and that China is not prepared for a rapidly aging society. This is an interesting trend with important implications for investors, something to watch closely. Here's a new ETF, the Claymore Alpha Shares China Real Estate Exchange Traded Fund, now traded on the New York Stock Exchange with symbol TAO or Dow. The China Real Estate ETF is the first vehicle to give investors a chance to invest and profit from the Chinese real estate boom and with the tax benefits of an exchange-traded fund. The ETF will invest in listed property development and real estate firms on Chinese exchanges invested in mainland China, Hong Kong, and Macau, the Chinese Las Vegas. The ETF will be reconstituted annually. Dow was up almost 3% on December 20, with shares currently selling for around $25 US dollars in New York. Speaking of property investing, Su Fund Holding, an online real estate broker based in Beijing, is planning an IPO on either Hong Kong or New York. Su Fund is part owned by Australian telephone company Telstra, whose American CEO, Saul Trujillo, is looking to use Su Fund as a cornerstone of increased China business. Property prices are rising in Chinese cities, up almost 9% in September, can only benefit from China's endless urbanization. Meanwhile, recent Chinese IPOs have seen mixed results. Internet content firm Pacific Online fell almost 20% off its offer price on December 18 in Hong Kong. Sinotruk has yet to trade above its offer price, also on the Hong Kong exchange. But Uni-President China Holdings surged on Hong Kong Monday. Grand Ocean Department Store out of Nanjing plans an IPO early 2008 and hopes to raise up to $200 million for expansion. The company currently has 9 outlets in Fujian and Zhejiang provinces. An important development for Hong Kong IPOs. Starting January 2008, new listings will be required to publish final draft prospectuses on the Hong Kong Exchange website. So more transparency coming. For my Christian viewers, I'd like to say Merry Christmas. I'll see you next time.
Make me happy this year. Listen to me, honey. Give Pearl something that'll be of some use to me, like a 5-pound box of money. Now there's a little gift.